Hi, everybody. Becky Garcia here with the Garcia Group at My Home Group, and I'm here today with Lizy Hoeffer. So there's Lizzie. She's one of our power partners that we work with when it comes to lending. And I asked her if she could answer a few questions for us today because we are getting a lot of questions right now from the public in regards to refinance and mortgage loans. So I asked Lizzie to come up with a couple of questions that both her and I keep running into so that we can maybe answer and clarify some of that for you. So you ready to go, Lizzie?
I am ready.
Okay, great. So first question, if there might be a housing crash, why is now still a good time to purchase?
Yeah, so first thing, and then you probably can explain this a little bit better, but everybody just kind of relates, recessions or bad economies with a housing crash just because that's the last one that we can really relate to. But housing crashes have a lot more to do with supply and demand than they have to do with actual recessions. Yes, there's a lot of people unemployed. Yes, there's a lot of scary news out there, but there's still lots of people trying to purchase. And as far as affordability goes, interest rates have never been this low. And we've been saying that for a really long time, that you can get a 30-year fixed mortgage in the twos. And that's just never been something that we've ever been able to offer. So even if there is a housing crash, even if you're buying a property, maybe let's say 10 to 20% higher than you think you should be purchasing it at, that monthly payment is actually going to be lower than it would be at a lower purchase price with a higher interest rate. And so 2 years ago, interest rates were pushing the 5%. And the difference that makes is literally $100 to $200 a month, depending on your purchase price. So you have more buying options in today's market, right, with where interest rates are and your monthly budget than ever before. And as a professional, I would say that we're not gonna be in a housing crash anytime soon.
Gotcha. And so let's say somebody tried to purchase, let's say even a year ago, from what I'm hearing you saying, if let's say they tried purchasing a year ago and maybe they just were just a little bit under where they needed to, qualify for, would now be a time for them to maybe revisit because those interest rates have, dropped quite a bit?
Absolutely. Affordability, you guys, I mean, you can increase your purchase price $30,000, right, in this marketplace, right, 30 to 50, that's a lot of buying power.
Mm-hmm.
So if you couldn't find something that you wanted to maybe a year ago, maybe a year and a half ago, now is definitely a time to revisit that.
Okay, now let's talk about refinance. So if somebody's looking, maybe they already own a home, but they're looking to refinance, what should they be looking for?
So my rule of thumb is you always want to consider how long you're actually going to be in the property, because it doesn't matter how much you're saving if it doesn't break even or make, most people refinance just to break even. And I really want you to get ahead financially. Refinancing does take away from your equity anywhere between $2,000 to $6,000. So you really want to be aware of what that monthly savings is and the amount of time that you plan on owning that property. Now, my general rule of thumb is that your refinance should pay off in about 2 years. And you should own your home a minimum of 4 years so that you can really recoup some savings. But I always tell people minimum of living in your house for 4 years or owning it for 4 years, savings of $200, and a refinance that pays itself off in 2 years or less.
Awesome, great, perfect. That's some great advice, because sometimes people ask that. They'll say, what time period should I refinance, and at what point do I start recouping that savings? So that's really helpful. So is there a difference in lenders, and should they shop different lenders and shop for a mortgage? What do you recommend as far as that goes?
So a year ago, I would say that every lender was fairly in line in terms of interest rates and fees. I mean, maybe we were off an eighth from each other, a couple $100s, but there wasn't a huge significant difference aside from customer service and process and, the quality of somebody's experience. But in today's market, where we've seen so many banks go out of business and so many companies add additional guidelines to their loan products, it absolutely makes sense to shop, right? One lender might not be able to approve you while another one can. I know that our company is still doing as low as 580 FICO scores. Many banks have raised their minimum credit requirements to, I think 640, 680, 700, sorry about that.
You're busy.
But now the email is just going bananas.
Okay.
So So yeah, it really matters. It matters in products, it matters in pricing, it matters in a variety of things. So right now, I definitely think it makes more sense than ever to shop, one, so you can get the best program, but two, so that you have all of the products available to you.
Perfect. Okay. So if anybody has any additional like refinance questions, or maybe they are looking to purchase their first home or second home, or however, whatever mortgage product they need, what's the best way that they're able to get a hold of you?
Yeah, so I would love for you guys to reach out. My team line is 480-818-6222. And then my email is Team Hoeffer, so that's Team HOEFF as in Frank ER at myccmortgage.com.
Okay, great. So what we'll do is we'll go ahead and we'll post this. Hopefully this will answer some of those questions that we are seeing come up right now. And Lizy will be more than happy to answer any additional questions that you guys would have. So feel free to comment below, and we'll make sure that we get those answered for you. Otherwise, thank you so much for your time, Lizy.
You got it.
Bye.
I appreciate you.